So is this the right time to get on that road to prosperity?
Thanks very much, Rishad, for having me on the show. What we're seeing at the moment is a real flight to quality for sort of our investors as a general rule. So, and taking advantage of certain dips in the market and the volatility of the market to buy what we consider to be very high quality stocks at very favorable prices. So we do see there's a lot of opportunity in the market despite the pandemic and the toll it's taking on people's lives and families.
So, I mean, is there a particular asset or asset class or sector that you look at the moment which you see surprisingly knocked down valuations and good quality, as it were?
Well, we've been looking more and more at acquiring quality real estate for two reasons. One is real estate values have not so far plummeted in good locations. In fact, we only see about a 5, maybe 10% adjustment during the worst period of the pandemic to date. And we also are looking at those kinds of assets because they generate ongoing cash flow if you have, of course, the right kind of tenancy profile in the building and you have a good location. So we see our investors seeking out these kinds of assets with a real flight to quality, real flight to location, and a lot of investigation into the quality of the tenants, so that there's less risk on being caught out without being able to either sell an asset, and if you want to hold an asset, being able to generate cash flow while you do that.
But May, we're also seeing companies, banks, for instance, in the U.S. Just to follow up on real estate, Ming, we've heard from bank CEOs perhaps saying that, they may downsize, move, their offices to cheaper areas. Could that be a risk to your investment in real estate?
Yeah, we do see that. But what we've been looking at what we're currently looking at are looking at properties where the tenants are likely to benefit from people having to social distance and to be less, out in public. So we just did a recent transaction where we closed in the middle of, sort of end of March, beginning of April, in the middle of the pandemic, of the peak of at least this round of the pandemic. Knock on wood, there won't be another one. But and we were very confident in closing that transaction because the tenants were benefiting from the fact that people were not going out to restaurants and so on and so forth. So one was a tech company, and the other one was a credit card company who is seeing a big pickup, obviously, in online bookings. So I think you have to be selective in what you're looking at. We're also looking at properties that are occupied by logistics companies as well.
In recent years, Ming, we've seen a lot of Chinese money flooding the real estate market overseas. With the rising tensions within the U.S. and China, do you see, those investors coming back and putting their money in Chinese real estate and boosting the Chinese real estate?
Well, I think that's a tricky question. We have not seen a lot of inbound money going into China at the moment with our investor base. I think there's a lot of concern about being able to get money out of China still, which of course you can do, but as you know, it's been more difficult the last few years to get money out of China so easily. And I think there's concern in the market, in the international market outside of China, that there's still a lot of, let's say, corruption domestically in China, and real estate is an area where you have to really choose your partners well, because we don't basically do anything in China anymore unless we have local partners on the ground that we've known for a long time and who have good track records. I think it's really important to have local relationships, to be very much local on the ground, whether you're investing in real estate, or we also invest into a number of private equity funds and do direct investments, but we always do it with local partners. So you have to be very selective. We have not seen money going into China from our investors actively, even though arguably there are opportunities to do so.
Ming, just Looking into ETFs, for instance, exchange-traded funds, how are you using those? How are you using passive investing in all this?
So what we do with our portfolios is we tend to have a hub-and-spoke approach. Our clients and with our own proprietary money, we're not actively trading, so we don't want to act like a hedge fund or think we're as good as a hedge fund. I think those guys are doing their jobs because they're really good at what they do. So we tend to be a little bit more conservative in our perspective in our asset allocation. So what we tend to do is to do a very core portfolio in ETFs and asset allocate relatively conservatively amongst that, and just basically trying to get beta exposure and liquidity. And then what we do is around that we will take opportunistic bets on. For example, we recently took a little stake in ExxonMobil when the stock price dropped. And we're pretty happy with that because it's paying a very high dividend. We feel that although the oil industry is taking a hit at the moment, that will not be a long-term trend going forward. We did the same with some tech stocks, including Alibaba, for example, and Tencent. When there was a big dip in the market, we took some positions there, adding on to our spoke, as you may call it. To sort of take advantage of the volatility in the market at the moment. But that's not a huge part of our portfolio, so we try to keep the ETFs. It's passive, but it's also a liquidity play for us and keeping cash available in the event that we do see other good opportunities.
Is there reason to think you should pile on tech? Tech has been supporting this rally and may continue to do so.
Yeah, for example, one of the companies who was a big tenant in the recent real estate transaction we did is Aviva. So Aviva is actually benefiting greatly from like broader broadband use, basically. So there are specific sectors within the tech that we're looking at more carefully to see how they might benefit. As I mentioned, logistics is another area, and those groups, logistics who have hub and spoke, also sort of infrastructure. We're looking at investing in another real estate deal, for example, that has a very well-known retail logistics third-party provider company as the main tenant. So we do think that in tech there are companies that are going to benefit because of the fact that people are staying home more and are unable to go out as much. So it really depends on whether we end up buying stocks to take advantage or express that particular view, or looking at real estate to combine that view with our underlying view of real estate being a relatively strong asset in good locations. I know in some major cities, like in the U.S., where we're looking at, we're seeing a lot of movement in the real estate market, where, as you mentioned, some companies are saying we don't need to pay expensive rent for some of our employees, but there is a lot of subletting going on within that, interestingly enough, and I was surprised to hear that recently. So I still think if you are in a good location in real estate, the longer term, that will end up being a reasonable play for you.